yes, yes, yes.
Pull the ripcord on bailing on this trade and taking a loss is. That stuff becomes clearly defined because of the way that we live our lives, man. Because of the way we live our lives. So I try to surround myself with people who think like that. And if they carry a lot of baggage or, don't feel like they're going to defend the kingdom with me, I start to separate myself from them. And first you start emotionally. There are people that will hinder your trading. Now there's 3 key parts to trading: money, method, and mindset. That's obvious. That's pretty much life. But then trading's broke up into its little component parts of what's an entry look like. You mean, what do you mean? I mean, what triggers you to click buy on your computer? What is it? If you tell me it's a fucking post or something as simple as that can get you to move, or because one particular influencer likes it, the moment they mention it.
Yes, 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 yes. You haven't seen that video on YouTube, you might check it out. A little philosophical. Let's let me pause that. A little philosophical. He says, I know when you buy when you have cash to buy, but not even then, man. You got to be able to time it, man. So, Mr. 428, what's up? So if you haven't seen that video, you might check it out. There's a couple good spots on here, man. I was trying to find one. Hold on.
Really gonna be disappointed. There it could be $10,000, $20,000. I need to ask myself, what is the entry to this stock? Well, for me, it's called a stage 1. And you know how I define a stage 1. 4 days where prices stop dropping, has started to go sideways. That I would officially call a stage 1 on a chart. Now, I'm also at the same time going to go look to see fundamentally what are people who have MBAs and masters in finance, what do they think about this stock? And so I spend about $2,000 a year on fundamental research, various things that I look at to help me determine. And
That's important. So you haven't seen that video, it's on YouTube. It was actually a recorded spaces. Sometimes I record them by video. I've been trying to think of the best way to record those spaces. And that's one way that I've come up with. So we're looking at ARC. I was saying this morning, I felt like the bottom was in. Of course, as soon as I said that, it started drifting lower. It very well could be the bottom. So what I'm looking for here every day is I'm looking for it to be the bottom. And the reason is that the RSI has signaled. Okay, so this is the same on the bottom as it is the top, meaning we don't know it's the bottom, obviously, and we need a couple days to establish that, and as it comes down, I start drawing my line, and I need a day to stop, Now we could have said that day was here, and you could have, but then the next day it went down. And that's why I wait on 3 or 4 days, okay? 4 is better, Let's look at an example of 3 where maybe you jump the gun. And there's nothing wrong with that. I'd rather see you jump the gun on 3 than on 2. But look at Roku. And you see how this 3 is making more of a box? That's a box. It's starting to build a box. See what we're seeing there? So as you begin to look, you're seeing the box being built. And so the money flow has 6 components to it, right? So I'm looking at 6 things. Is the RSI extreme? Yes. Okay. Is that always the bottom? No, but that's usually what it looks like, okay? It's usually what it looks like. So we got that going on. Is price going sideways? Yeah, basically. So check, check. What about the MACD histogram? Is it starting to let us know that the momentum to the downside is done? Yes, it is. So we're starting to see these component pieces, need the stochastics to come out. Does that mean a rally? And we don't know. We don't know, but that's what they look like. That's what they all start with. That's what they look like, And so if I'm swinging this, my first target's here, my second target's over here, and I'd start swinging it. If I'm position trading, then I'm probably not really going to mess around much with that target. I might because I need money to put into others, right? And so let's say you're like, hey, I'm all in. Yeah, but not really. Because when this breaks and runs up there, even though you're down in it, you could sell some because you've had a big move, so your account balances come up a little, and you could roll that to something that has a better setup maybe. And as this thing moves up, maybe, so money can be moved in and around a position. So let me turn these badges off. It's something to keep in mind. And this is Roku. I like the setup. Ordinarily I'm waiting on 4 days. I'm in no rush to run up into Roku, but it is starting to go sideways. So, opportunity cost, but only thing I added to today was SoFi and HBI. I'm not going to keep texting that HBI one. So this is a full-blown stage 1, and so I added to it. You got to be comfortable adding. It's 16% move up. Yeah, no shit. That's how low it was, man. That's how low it was. So this is a stage 1, super bullish. It's back above the 5-day, and it's back in the box. This is the most bullish sign we have, where the box was broken, and the next day it comes right back. There is no more bullish sign in the money flow. And I don't really have a chapter on that because I said when I wrote the book, I'm not a professional writer, nor am I a professional speaker. So there were things that I just didn't even think about that I was doing, until you begin to teach it and you're like, oh yeah, I do that too. And I do this and I do that. And it's hard sometimes to put all that into a book unless you talk about it a lot. Is one thing I've learned. Appreciate that, Tony. What's up, Aaron? So back in the box, super cool. It's still stage 1, not even a breakout. We got a lot of room to the upside. I was really thinking this could be a buyout, but I don't know if they want to be bought out. So, if I was a bank, I might consider buying these guys out. SoFi. I don't know that PSFE is necessarily a buyout because they're involved in dirty business. They process credit cards for porn stars and gambling sites, all the dirty stuff. No, sir, this is SOFE. So I added today to this. It opened up 14, 15% up, started to pull back. I started adding to it. We should move higher from here. We'll add again. This thing just got stupid low. I think most analysts think it's worth like $22, $23. Let's see. HBI, I've been buying shares daily, but this isn't my buy and hold account. That's in my swing trading account. So I'm swing trading SoFi. But in the buy and hold account, I keep adding to this. Like every day, 5 shares, 10 shares. Every day. I'm trying to get as many as I can before it breaks out. Market's under pressure, so I may have a lot of time, right? A lot of sideways there. Stock's worth $21, $22, so we'll see. A bread and butter one that I took some money off the table today in my buy and hold is Dow. This is that setup, right? Price sells off, starts to go sideways, and we're way below the 200, and it pays a dividend. It's actually the highest paying dividend Dow stock out there. The dividend is 5.6% or something. So I took some down. RSI is extreme. Completed move. Could go higher. So I just trimmed some odd lots, man. Trimmed some odd lots off of Dow. And you'll see. So I assume this is the top. Remember how I assumed that was the bottom for ARK? It's the same on top as bottom. So a stage 4 or a stage 3 is the same as a stage 1. So this is a stage 3 forming, right? And if we look back at, let's do arc here. I'm betting this is a stage 1 starting to form. Now, I don't know that yet, but as it builds out sideways, I assume. And if we go back to Dow, but let's look at AT&T and we'll see the opposite. So this is the opposite of arc. And I'm looking for AT&T to top out. And so I'm calling this the top. Now could keep going, but you see like it's starting to build a box, right? And that would be that stage 3, what we call distribution. Meaning for every seller there's a buyer, and it kind of hangs in there until it starts to roll over. And that's the normal movement of price, of price just moving. So, bottle of Uber, huh? I think you may have jumped the gun there a little bit, Aaron, even though I do love the stock. Nick said, when you do a swing trade goes down, I know you don't use stop losses, but when do you sell? Well, if it's legitimately a swing trade and it breaks support, I get out. If I don't do a lot of pure swing trades, most of my pure swing trades take place in things like triple leverage funds, things like that. Some stocks I do as a pure swing trade. You know, an example, I was trading Zynga, but it went down, and I didn't honor a stop on it because I feel like the company was already stupid cheap. I'm not going to get stopped out in something I know is worth more money. I just can't do it. You know, that's not short-term trading. You know, so over here, I started accumulating shares of Zynga. You know, it tried to break, came back down, tried to break. You know, right in here, you need to get stopped out. So you got to create your own stop rules if you're wanting to trade that tight, and then that's fine. But then don't bitch about it when you get stopped out if you're the one that put the stop in. Okay, the whole point of the stop is to be activated. That's why you put it in. You know, now really it's to protect your capital, right? If you're short-term trading, and if that's the game, if you're rolling, you know, then you got to be cool with taking those hits and just stepping aside. And the easiest way to be cool with that is to make your trade size a lot smaller and just you're cool being stopped out. You know, the guy that created the ADX, he has a very interesting, he calls it extreme point rule. I'm trying to think of a good example here of the extreme point rule. Well, let's take AT&T. Let's say we were over here on the breakout day, right? What Wilder did, who created the ADX, DMI, let's say that's his breakout day and he gets long. Well, what he does is he takes the average true range, which is another indicator, ATR, average true range, which figures out how much a stock moves typically on a day. He takes that and multiplies it times 0.5. So let's say the stock moves normally $1 a day. Well, he would add 0.5 to that. That comes out to $1.50. So off of the extreme low of the day he got long, he would go down $1.50 and put his stop loss. And I'm just making this up on the screen. Let's say that's right there. You know, and that means it's going to give it room inside of the average true range. But if it doesn't immediately kind of start going his way, he's going to get stopped out. That's fine, but you got to be okay taking a lot of hits, man. You got to be there to watch it too. Do we think we're moving into a bear market? Yes, I do actually think we're in a bear market. We've been in a bear market. I mean, growth stocks have been in a bear market. That's all you have to do to understand the disconnect from television. That's where I was trying to find in this thing. I think I was talking about it. Hold on just a second.
Often they all agree. And you say, why would you have all three? Just come selling these money flow journals. And if you ever see the method that I wrote it in a book, all this just nonsense. Like there was no consistency in any.
There it is. Hold on.
RSI. And I'm watching CNBC and I'm like, what the breaking down the difference between swing trading and position trading and targeting the stage ones and how to implement that into your buy and hold. They may have been teaching a piece or a bit or a part, but not the cumulative that I had put together because I couldn't find it. I'd go look and I get bored with this guy and I go here and I'm like, this is bullshit. And I'm looking at them like, this motherfucker's buying it. It's a 69 RSI. And I'm watching CNBC and I'm like, what the fuck? Like, he's saying to sell this. The RSI 62. It's gone straight down. It's already lost half. And I would just see all this just nonsense. Like, there was no consistency in any of it, man. And I realized that the news is just full of shit. It's like drama central, filled with bits and pieces of the tickers of the pieces of the market that are moving. Meaning, they're going to make up some stories or get a story or get a guy's opinion on why oil went up $1. If oil moves 25 cents at the end of the day, they will have a reason for that move. Now, they don't know anyone that actually purchased the oil or sold the oil contracts or works on a tanker or pumped it out of the ground, or they don't know. When truth is, that's just price floating, right? But there's always a story, and then
there's always a story. They say, why do you think? People sold it, man. That's why. People sold it, that's why. I guess I gotta turn off comments on here. I just bring out the Arab in everybody. Let's see. Y'all can't handle the truth. When your swing trade goes down, you don't use stop losses. You could also use what's called a mental stop loss. Let me turn off these comments for a second. You can use a mental stop loss. Now, a lot of trading books will talk against that. And I'm going to be honest, man. Most people that write trading books, I don't believe actually trade. And I know this for a fact that the guy who has sold the most trading books, Michael Covell, Trend Trading. I'm sure you've heard of Trend Trading Radio. That guy doesn't trade. He writes books about trading. He himself does not trade. And, there's a lot of people who write about football. They don't play football. That's not uncommon in a lot of fields. It's not uncommon to be a commentator about something, to know about something, but they don't have any actual practical application. They're not actually trading. They just write about trading. And there's a lot of people in the investing world that proliferates real estate. They don't do real estate. They commentate about real estate. They talk about it. So, I don't know. I'd lost $70,000 trading, and then 7 years later, before it even occurred to me that I should write some shit down. And, you got people doing things, and, I don't know, man. I don't think they really do it. So keep that in mind. Just because someone sounds like they know what they're talking about doesn't mean they know what they're. Doesn't mean they're doing it. They may know what they're talking about, but they don't. Doesn't mean they actually do it themselves. And then you got to ask yourself, well, why wouldn't you do it yourself? It's kind of like the invest in real estate with no money down. Well, if it's such a good fucking investment, why wouldn't you put your money in it? It just never made sense to me. So you got to ask yourself, is what you're looking at making sense? And that's what the money flow is about, man. Trying to make sense of order. It's not necessarily price prediction. I think that's a waste of time. I don't know where it's going. I know over time it goes up, right? And so what I'm constantly trying to do is evaluate is a stock good? Where's the best place for my money right now? And, it's not to avoid all down moves and catch all up moves. I just think that's mental masturbation. You're just wasting your time. You're not going to be able to do that. You could mitigate it. You could hedge. There's things you could do. There's strategies there's that. There's that. So you're looking at AT&T here. It was killing you, right? That's what I heard that a lot. Do you think I should sell this? I had people asking me, you think I should sell AT&T? The only reason you're saying that is it's gone straight down. And then it comes a point where they're thinking of selling it. And it's like, well, that's not what the money flow says. You should buy some here, and then you should buy some here. That's what it says. Your ability to stay with a strategy is slim to fucking none, probably. Most people's ability. They've quit everything they've ever started in life. Every diet, every boyfriend, every girlfriend, every hobby, every new venture in life, every exercise thing, everything they've ever started, they quit. Me too. Most things I've started, I think I'm going to play this. I think I'm going to do that. I think I'm going to... Your ability to stick with a strategy and stay with it. That's kind of what I go through and I talk about in this video, if you can handle it. And it's slim. And you say, well, how do you know? Well, I've made a lot of money in the stock market, and people come and go in my trading group. And I make a lot of money. The difference is my ability to weather it, you know? I've seen these things happen a bunch of times. That it never occurred to me that I was going to sell AT&T. That never crossed my mind. The only thing that crossed my mind was I'm going to accumulate more on stage ones. I fully anticipate that it's going to correct and run back up. I mean, that's part of the strategy, man. And so, you know, obviously the more speculative the stock, the riskier, which is why you'll hear me say, don't put that much money into a penny stock. It could literally go to zero. This, I don't know, buy as much as you want. I mean, you know, or a bigger one, Dow, IBM, Amgen. I mean, you know, what position size? I mean, whatever you're comfortable with. I like to own a lot of stocks, so my sizes are going to be smaller. Like Starbucks is on my list. This is not going to zero. Anybody bothered by this well, I can't say that word, but anybody bothered by this shouldn't watch my content. Like, I don't want you to. You're the wrong person. Like, I can't help you. You need this. You need this. This is how you get rich. This. And there are people who will spend all their life trying to avoid this, instead of embracing it as price movement and then waiting for the accumulation, you know? And, you know, and this will run back up and get up in the 124, 125 range. That's what prices do, man. And, you know, we can go through the list of recent ones, you know. Where we at? Look at Amgen, you know. Months of this. You know, look at this fall from grace. You know, now it's coming back, right? And, you know, there's all kinds of stocks like this. Now, that's not a short-term trading strategy, right? So you got to get real clear about what you're doing and how to do it. And then when you start blurring the lines, this is why I try to get anyone who's a student of mine, you have to separate your buy and hold from your trading. You can't be having your buy and hold on margin or any of these things. You have to have honesty and integrity. And part of being a good trader are intangibles that a lot of people don't have. They're not honest, meaning they're not honest with themselves. So they won't honor a stop loss even if you gave them one. So you could show someone how to use stop losses, like the guy was asking me in the beginning about using stop losses. Well, I can show a fourth grader how to use stop losses. It's not fucking complicated, dude. You just put in a stop below the recent low. And if it gets hit, it gets hit. You're the one that put it in. Now, do you have the ability to continue to use them trade after trade and stay with your strategy? That is the problem. I highly doubt many people on here have stayed with the same strategy year after year after year after year after year after year after fucking year after fucking year. Doubt it. Most of the influencers I follow don't even do that. They're constantly changing shit. Constantly changing shit. Now, some people will say, well, that's because the markets are changing. Bullshit. The markets aren't changing. Markets are doing what the markets do. It's been trading the exact same way. Fear and greed move markets. It ain't got nothing to do with some new technology or some new doodad or some new whatever. The fear and greed move markets. And if a sector gets hot, guess what? People start buying it. And when it's no longer hot, guess what? It starts to go sideways. And when it cools off, guess what? It starts to come down. And that is called the 4 stages of price movement. It ain't no more than that, man. And that's how. Now, guess what? Every chart's not going to line up perfect, and every trade's not going to work like this. So what people do when it gets out of whack, they say, well, fuck, man, that guy's thing over there works, so I'm going to go over to that guy's and use his thing. All right? And then his thing stops working for a minute. Because all strategies do that. They come in and out. And you'll see it on the news, too. Even as something like buy and hold, they'll be like, well, index only beat stock picking this year. That is the dumbest conversation. What does that mean? How do you know that? You don't know what stocks I picked. So what they mean is active management. Like they're comparing it to hedge funds. Okay? You know, like, I don't know. It's so stupid. But that's what they feel. They put that in your head. So you're given stupid information all day long. Stupid things that mean nothing by stupid people. And somehow you're supposed to interpret that and do something with it, man. Ridiculous. So that's what that video is about. So trade-wise, what are we trading? I think you should jump on this SoFi train. Toot toot. If I was swing trading, I'd be on this. And I'm position trading this, but if I was swing trading it, there's your breakout, man. And your first target. And my man said, what about a stop? Well, on this one, I would do half my stop here and half my stop here. And then as this thing moves up, I would readjust these stops. Don't make it complicated. There you go. Now you know how to use stops. Lesson over. The hard part is applying that consistently, day after day after day after day after day. IRM. That's one we bought a while back when it was really cheap. Now look at it. This is beautiful. This is what we want, right? This is what we want. So this is setting up, but it's not yet, right? So what am I doing? Every day I'm looking for the bottom. So every morning I'm like, that's the bottom. A couple days over. That could be called a box, right? But what? That RSI is not extreme, right? So I question any box where the RSI is not extreme. It's not worth my risk. Now, there are times that it doesn't get extreme. Cool. Then let it set up, and it'll get obvious that that's the case, okay? But for me, that's not luring me in, because why? It's not extreme. There's 6 points to the money flow trading strategy, right? 6 things that we're looking at. Now, not all 6 necessarily have to line up, but, you know, if the RSI is a pretty big one. This is pretty big in my world, okay? I honestly, if you just did nothing else but followed that, I think you would do okay. And it measures, technically it's an oscillator that measures the velocity of price, how fast price moves. Now listen, all you guys that have changed your strategies and switched to this and that, RSI didn't change. This has been the same fucking indicator for 21 years since I've been following it in the stock market. It never changed. So when I had a baby, it was still the RSI calculating 14 days. And then when I, had an emotional breakdown because of this and that, the RSI was exactly the same. It never changed. I did. And a guy asked me, what's your most valuable possession? You're looking at it right here. These indicators. Not a watch? No. Right here, these 6 things. What about a beach? No, I like this better. Well, what about when you had a BMW? No, I like stock charts better. I can buy all the BMWs if I want, but I figure this out. So, if you don't love it, I don't know how it's going to work for you, but I mean, this is exciting to me. I own this stock and it's coming down. That's exciting. So IRM is exciting. Look at this coming down. And here's the thing is I have this knowledge that I know I don't buy this. Anyone that's been around me 10 minutes should know you do not buy this. Not yet. It is straight down. There's nothing yet. We're waiting for the sideways. And we know what that looks like. Right? We know what sideways looks like. So this is just a random chart I grabbed, or somebody posted it. They said it. So we want to buy the sideways, right? And as a general life philosophy, as you go forward doing that in life. Oh, thank you. As you go forward in life doing that, doesn't that look like that's a much better way to buy, man? So money flow is philosophical, man. And when you're not getting it, it's because you're not seeing the philosophy of it, man. Gee, that video yesterday was one of my favorites. I appreciate that, David. I know I got off a little bit on there. I think may confuse people when I start talking about Elton John. I like the video version of Spaces. The message comes across even better when you're... Cool. I appreciate that. We'll see. I'll try to record some more of those. Just weird talking on Twitter. There's nothing there. You don't hear anybody. It's an unusual experience, especially with headphones. CRM. Let's look at that. Starbucks is not ready yet. IRM's not ready yet. CRM is ready. This is ready. Let's see. CRM is ready. Let me see. AGP for ATVI, does it convert to Microsoft after they buy it, or they just are doing just selling it? I think it's a cash offer, sir. Once they're just going to give you that $95 or $3 or whatever it was. Takes a while, though. It'll take a while. Do you think ARK recovers to the previous highs, or is Kathy done for? Man, you need to stop reading the news, bro. Is Kathy done for? You know how many times I've heard that shit about Warren Buffett? Warren Buffett will never be back. He does not understand how stocks work. No, ARK is not going to 60. The bottom is in today. Doubling down on the Dow stocks. A lot are on sale right now. Yep. WBX. I closed that, sir. WBX. No, we closed that out. When your swing trade goes down, we answered that earlier. I'm not in WBX. I closed it. That was a pure swing trade. It went against me, so I got busted out. Haven't tried jumping on Clubhouse anymore. Nah, Clubhouse is... I almost used the wrong word. No, the Elton John reference was excellent. Okay. Yeah, I like Elton John. Let's see. CLSK. I just can't believe that's going lower. Straight down. Took a shot here at this being the box. Did not happen. Down it goes. So I would not add here. I would just leave it be right now. DocuSign. Let's check on this. Is a good teaching stock, this DocuSign. First off, they don't have a moat, man. That's what's got me a little concerned about this DocuSign. All right. This is a lesson. Whenever a stock, I'm telling you, if you'll listen to me on this, it will greatly benefit you over your life. If you ever have a stock do this, the last thing you should do is buy it. That a drop that massive structurally fucks the stock up. No hedge fund wants to buy it. It is damaged. Okay, this is the girl you do not want to date. She is damaged. Okay, you gotta wait, man. Yeah, it drifted a little higher, but look what's happened now. We're an entire month in, and it's lower. It's lower. You know, did we go sideways here? Yeah. Did it come in? Yeah. But you know, I know what's coming. We're going back down. So at the, you know, I'm surprised that honestly it even got that little bump. You know, I'm surprised that even got that little bump. This usually takes a long time to recover. Months and months and months and months. Go look at Viacom. Go look at anytime you get a stock that gets hammered that big, it's not good. And it leaves a bad taste in people's mouth, and they don't typically run up in there. Let's see, what was the other one? What was the other one I was looking at? Yeah, hold up on triple in your position on DraftKings, but I am with you on that, man. It is still bleeding. Fuck. Wait for that to go sideways. I tried to nibble in here. I'll nibble on the next one. I'll nibble on the next one. I mean, that's just the way to play that. CHG. Yeah, that one took a while too, right? CHGG. Look. And I could show you these chart after chart after chart of stocks. When they get donkey punched like this, I mean, that's not a 4% drop, dude. That's like 50. When a stock goes from 60 to 33 overnight, do not run in there. That's like a fire, building catching fire, and it's flames everywhere, and you're like, I think I'll run in there. Don't. And then you see what happens. And then even once it does come back, look. This could go for 5 months. I wouldn't be shocked at all. It's dead money. Now, I get it. You could say that about position trades. I'm talking about when they break like this. When they have big breaks like this, you're going to be hard-pressed to find one that had a 30, 40% drop that very quickly recovered sideways and then took back off. You're going to be hard-pressed to find a stock like that. You may come across a few, but not many. I'm buying live at your place in NOLA. Let's see. You're buying live? Oh, did you buy a ticket? I got a few tickets left for our little event. Day Trade Professor is going to be there. Obviously, probably talk about some short-term trading. If you bought a ticket, feel free to bring your computer. And we can look at charts on your computer so we can get it set up right. It's Friday and Saturday. Saturday, I'm going to try to mostly stick to real estate unless nobody wants to do that. Then we can flip it. But I got a guy coming who has more houses than I do. I think combined we have like 40. I'm going to interview him, and I'm sure he's going to give us all kinds of real estate stuff that I don't know about. Ooh, man. Come on, man. XELA. You cannot touch this, bro. It's 48 cents going straight down. No, this is not an environment for 48-cent stocks. Do not buy that, man. If you own it, just chalk it up to a bad date. Leave it be. Maybe it comes back. Whew. This is not an environment for buying stocks like that. Not yet. Yeah, this is horrible. Why are you doing covered calls on... Now, be honest. Some guru put you onto this one, right? The QYLD. Where'd you come up with this thing? The covered call thing. You watched a video and the guy's like, we can earn income off of our NASDAQ stocks. So if a person wanted to use this strategy for options trading, this is the question before people lose all of their money. This is how it goes. If a person wanted to use this strategy for options trading, and then in quotes I put soon to lose all his money, would using all 6 indicators be the best bet, or do you think favoring something RSI along with the Greeks is better? I think you're going to lose all your money, Ty. That's what I think. But yeah, I mean, you would want to modify the money flow a little bit if you're using exclusively for options for sure. And then obviously you're doing time decay. Now we got the part about the quality of the stocks you're going to use. it gets very complicated when you start bringing it in like that. The way I like to use it with options is to also own the shares and just sprinkle in the options with it. But I also would never buy options like today. I mean, we're in a downtrend, man. We're in a downtrend. So, and we don't know when it's going to turn. And time is going to kill you, right? So be careful. A put strategy, honestly, would be... Oh, you're still paper trading. Okay, well, that's good. I feel better. Play with it, man. I don't like talking about that, and I have ways I do it because people will do it, and then they're going to lose all their money. I like the... what the fuck? I'm fixing to have to end this on Instagram. Let me shut this down on Instagram, man. I had some ass clown fucking spamming me. This shit never stops, man. Never stops, man. I think I'm fixing to have to set my damn account to private. Wait for a SPY and queue to bottom and then do... Yeah, I mean, that's one definitely... That would be... I like that idea. You could also buy a triple leverage fund and then you don't have to worry about expiration date. If you're just looking for some leverage, man, you could buy a triple leverage fund. If you like riding the ups and downs. Yeah, man, like on there, it's showing me people following me on IG from the live, and it's just person after person after person after person, and their names are like Julie 674231, Gary 967922, and so somebody's just bot following me right now. I need to set my account to private, but then I'm gonna take it off a business setting. It's so annoying. And now they're starting to ask me questions. So I go in and they DM me questions from the fake accounts are sending questions. And they'll be like, how are you? And I don't mean like a few. I mean dozens and dozens and dozens. How about you? And they ask, sometimes they try to get slick and ask, a question related to a book or something. All right. Let's check back in on... yeah, don't buy this XELA. My God, man. That looks terrible. ARK just turned negative. Damn. I was really hoping we caught the bottom there. Nope. Not to be. So you got ARK turning negative and you got AT&T about to turn positive. What are my thoughts on Romo? A disaster. I don't know. There's no bottom on these guys. On IMVT, I've been out of this for a minute. I would not commit any money to any of these small biotechs unless you're really, 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 really watching them. Or any of these penny stocks just yet. The Romos and I think their day's going to come, but, now it's, Uber, Lyft, Teladoc, DraftKings. Yeah, I would buy every stage one. These, a lot of these smaller ones, I would not. I would wait. Unless you're going to do it with some very, very small positions, When tech goes back up, a trend, I suppose, ARK will too. Maybe. Remember, ARC is growth. So, only recently did tech start coming down, and growths have been in a bear market for a minute. So they kind of have the double whammy there. Let's look at the dot. Theoretically, yes. Now, dot is one that I've been accumulating. Probably gonna buy some today. Playing this support zone here. I like the dot trade. If it breaks this low over here, I would stop though, because that tells me we're going down, down to another one, and then we'll start it again. Yeah, DK&G is a legit business though, man. They're gonna get bought out if it goes too much lower. David, did you say, what do I mean by a box forming? I'm going to assume you don't have my book. You should get the book. Let's see, AG&C. Well, up until today, sir, I would have said it's forming a box. Meaning you can see it. You can draw it. See that box? There's a box. See it? There's a box. It's these little zones. Well, breakouts and breakdowns. Now, this is all over the place right now on this AG&C. This is not a trading chart. AG&C is something you just buy and hold. This is not for trading. I'm trying to think of what's a good. Let me look at Amgen. Let me show you a box, sir. You usually get these boxes at tops and bottoms. That's a box. Now you'll see boxes as it goes, like it runs up, puts in a little box. As long as the box stays on this side of the green line, then we kind of assume it's just going to keep marching, and eventually it's going to put in a box and go sideways. And that's what this pattern is about. And stage one will start as a box, and then what we hope is that it breaks out, meaning breaks out of the box, closes above the 20-day moving average. Well, the top's going to end up being a box, and then it'll roll over. Now, they're not always perfect, but a lot of times they're picture perfect. Like, they look just like it. And that's what I'm looking for most of the time. I'm not trying to make a stock fit into the money flow. I'm looking for the money flow. You know what I mean? They're like, what do you think of this stock? I look at it. It looks terrible. It's not a money flow stock. See that box right there? See that box right there? There's a box right there. And now we're forming a box right there. This is a money flow stock. So you had one over here, right? And then you went down and then sideways and then what? Then up, sideways, down, sideways, and then up, right? And now we're going sideways again. Now, as it goes, you can make the case it's forming a box. So I do that. As it goes higher, once it hits that extreme RSI, I start assuming that it's going to go sideways. Well, same to the bottom. Once the RSI goes extreme, like it did here, I start what? Drawing my box, to the left here. And as it plays out, which is why I want 3-4, minimum 4 days ideally, as that starts to play out, I can say, okay, a box is formed. Well, a box has 4 corners. To have 4 corners, you need 4 days. You get where that comes from. All this stuff is fractal. And, and the bottom looks just like the top. These are just yin and the yang, man. It's the same. Just like an up is the same as a down. Stage 2 is a stage 4, just in reverse, right? So really the market only does 3 things. We just draw the picture like this. The 1 is the 3, if you think about it. And the 4 is the 2. Just what direction is it going? Videos pushed me to work. Oh, that's good. AJ says he knows they keep going down. Yeah, they're going down, but if you're reinvesting the dividends, are they going down, sir, or are they going up? Let me show you an example. Let me see if stock return calculator. I get that a question a lot. So this website here will if it doesn't lock up my damn computer, you can come over here and just put in a stock, and it'll give you for the last 10 years. If it doesn't lock up on me, this website sucks ass. I just ordered a new computer. Come on, man. Anyway, I have this website in the book. For some reason, it's not calculating. Oh, up here. Hold on. So, AG&C. Starting amount, $10,000. We bought it in 2012. It's now 2022. This will be a 10-year calculated return here. If we come down here and look, final value of your 10,000 bucks. Ooh, that's not good. 18,196. Well, part of that is fucking COVID there. So annual return has only been 6% in AG&C. Not good. Let's check NLY. Ooh, not good at all. I may be running these wrong. Look at MO. 11%. A little bit better. But on the the REITs have definitely been lowering their payments for sure. The way I play that is I only add when they move down. So that can help offset. This website is fucking rocking my computer. I just set mine to drip fidelity account. Dripping's good. Yeah, I could see moving out of AG&C. I've been in it a long time. You know, MO, PM, there's some other high yield ones. You might look into closed-end funds. You know, any of those in a high rate yield environment are going to start to have problems. Any of these high yielding, like YYY pays a 7%. It's made up of 30 different closed-end funds. And if you notice, it does a pretty decent money flow pattern, right? There's your top, there's your bottom, there's a bottom, top. And it's kind of following the formula. It doesn't move very aggressively, though. That's the problem. But if you just wanted to drip a dividend, you know, there you go, 6-7%. I think it causes the time frame is only 10 years to less compounding. Yeah, for sure. PDI is PIMCO CEF that pays monthly. Yep. And obviously, this is made of 30 closed-end funds. Their strategy for picking them is not very good. There's a lot better ways to pick closed-end funds. PDI is a good one. You see the pattern's the same, though, right? Yeah, like he's saying, it's below the 200, which is really good because it's probably got a bunch of REITs in there. It's got a bunch of these high-yield stocks. They've come down. Probably a good time to start buying those. What do you mean by DRIP? DRIP is technically stands for Dividend Reinvestment Program. DRIP. DRIP. I use the term to mean small term buying. So if you hear me saying I'm dripping into, when I say that, I'm not referring to the dividend. So when I say I'm dripping into Haynes brands, I don't mean I'm reinvesting the dividend. I mean I'm drip buying, meaning I'm going to buy 5 shares today. That's like $80. And then tomorrow, 5 shares. 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 Like I'm dripping instead of just putting all my money in at one time. Most of my buys and sells are drips, even selling. So today I took profits in Dow. You see, you hit a RSI, stop, probably going sideways now. So I took some profits. Well, I took profits, meaning I sold like 6 shares. So I pulled off like $400. No big deal, right? I also pulled off AT&T a little bit. It was like 5 shares or some shit. Well, if you do that across 8 stocks that are banging this RSI, you now raise enough money to start a new position. So that's what I like to do. But yes, I am technically dripping into HBI as well as far as the dividend. Yes, sir. I was just trying to make a distinction there. That's it, man. I think that's all I got. Most people should just drip your dividends. If you watch, I'll show you what. Let me show you what let me pull up E-Trade here. Let me pull it up on this other. I'm a huge believer in that. If your account gets large, like I collect almost $2,000 a month in dividends. In that situation, then allocating where that money goes is fine. But trying to sit around allocating, a $20 payment is a waste of time, in my opinion. Just let it buy you more shares. So let's see. So this is one account. And if you look, these are all dividends except ARC. And when they're about to pay, you see this little flag come up. It's usually when they're about to pay or they're about to have a special moment. Anyway, where's HBI? My original purchase, when was that? 2018. So these are all purchases. Yep. All the way back. 2018 is when I started buying this. And I bought 12 shares. That was $197. It's basically the same price as when I started buying it. And if you see, look, 13 shares, 15 shares, 16 shares, 17 shares, 18 shares, 20 shares, 20. Those are all in the same month, 21 shares. There's some bigger buys back. Later on, there's bigger buys. Why? Because it went on sale and I had more money. Or I took profits in some. I bought 45 shares. Now I'm up 38% on that, right? So I bought 100 shares at one point. But then you come down, these are dividend payments, so they're all dripped. So when they paid me, they paid $110. It was 6.7 shares, 6.7, 5.8, 5.6, 5.2, goes all the way down, right? So that's what, since 2018, 19, 20, 21, these are little drip payments, $100, $100, $90, $86, $83, $72. You notice the number goes smaller and smaller. Why? My first dividend from Hanes Brands was $6.15. That was in January, February, March of 2018. I had like 20 shares and I got a $6 dividend. Fast forward to 2022. In January, they paid me a $164 dividend. No, that's not right. When was the last one? Where was it? I hate the way E-Trade does these. Anyway, it's like $100. There it is. Yeah, there it is. 12/1. So in December. No, that's still not right. Anyway, it's like $100 right now. $110, $112. Started with $6. So when you see me on Instagram post a dividend and it's like $9, you're like, why would he post that? It's probably a new position. So if you come down here and you see like Iron Mountain, I only got $3,000 in it, and the dividend payments are what? $50. But what was the first dividend payment? It was $41. And my first purchase, I bought 47 shares, and then I bought 10 shares, then 9 shares, and then it took off, and I haven't been able to buy it since because it's gone up. But now, if you look at it, what? Now, if we look at Iron Mountain, what's going on? That bitch is getting smoked. So now it's back on the buy radar. But it's not set up yet. So it needs to stop dropping. And then I'll start adding it. And guess what? That you're going to see that dividend go up. It's going to go up a little bit. Well, fast forward 3 or 4 or 5 years, and that's now paying 100, 125, 130. Fast forward, you got 30, 40 different companies in your portfolio. And you're not constantly changing your mind. I think I'm going to sell this, buy that. Like, you're actually compounding. You ride it through the good times and the bad. I'm telling you what's going to be your biggest problem is you're going to go, well, That stock sucks now, so I'm going to sell it and go buy this good stock. And you're always chasing a good stock, and you never get to take advantage of when a stock does bad because you're constantly fucking selling it. And I watch people do this. And their buy and hold isn't a buy and hold. It's a half-assed temporary sort of trading account where they're trying to always buy the good stocks. And anytime their stock has a problem, instead of loading up on it, they're trying to get out of it. And I watch people do this, man. People be like, why would you own Coke? They having this problem and that problem. You should own Dr. Pepper. Right? And I'm like, well, they fixed that problem. Now it's worth a lot more money. So if you back up, of course I wanted to own Coke at $44. Where was Pepsi then? It was still at $140. It's a better company. Pepsi is a better company than Coca-Cola. It's run better, it produces better, and that's why it's $175. You know, but when did I start buying Pepsi? I haven't bought Pepsi in years. Let's see. 2012. Going down. Look at all these transactions for Pepsi. These are all dividend payments. This is all dividend payments. Dividend. Just look at them. Now, this was not the best company for the longest time. Like, you get what I'm saying? Like, they fixed shit. They did this. They did that. Some of these are up, you know. But you don't get that if you bail on the company because they did bad every time. Let's see. What was up on Walmart? 2015. I started buying Walmart because they were going to go out of business because Amazon was going to replace all retail. Remember that? Good. I'm going to start buying Walmart. So you want to be on the other side of a lot of these transactions. Let's see. I mean, I wish I had more Delta Airlines. Nucor Steel, that's a hot stock now. I was underwater in that stock for like 2 years. I bought it in 2015. Look at these dividend payments too. $30. $30. Tiny, right? $30. But now all those 30s have doubled. All those 30s are 60s. And guess what? The 60 is going to double. But when steel does bad, I didn't sell the stock. I bought more. I mean, so be careful constantly analyzing your portfolio, only wanting to have the top producers in there because you'll never compound. Doing that means you're going to have some bad ones. You're going to get some that you get wrong, and it's just going to be a shitty stock, and that's just the way it's going to be for a while. So everything you see on here that I'm up big, I bought it when it was shitty. So when did we buy Pfizer? This last go round. I've been buying Pfizer forever, but look, 3 shares. Look how little these buys are. 3 shares, 3 shares, 3 shares, 5 shares, 5 shares, 5 shares, 5 shares, 5 shares, 6 shares, 6. Why is that? I'm drip buying. So when you see it turn into a stage 1, right, like over in here, I'm drip buying. I only got a few bucks. I'm just buying 2 shares. Well, if you do that for your whole life, you end up with a bunch of fucking money in shares. I mean, that's just the way that works. It's just not exciting, and it's not near as fun as Shiba. You know, that's just not sexy, man. It's boring. I used to try to talk more about this stuff, but everybody wanted to hear about, whatever stock is hot. They don't want to hear about this stuff, man. But there's a lot of money, and that's why I was like, well, separate your account so you don't blow this out. Like, this is... I sell almost nothing. The only thing I sell in here is to trim it. I'm kicking my ass for taking gains in McDonald's. Like, I had 150 shares at one time, and I kept selling them to buy other shit, and it went from $48 to $270. So most of anything in stocks for me is that I regret is selling, not buying. To be honest. let's see. Now, this is just one. Now, if I bring up the growth portfolio, it looks ugly like yours, right? So, if we bring this up, let's do all brokerage accounts. It gets a little, all of a sudden you start getting some reds in here. So if we do all of them, you'll see my position in BX is 35,000. It was like 50,000 and they had a pullback, right? And if you notice, I'm way out of whack. That is my largest position times 2. The next largest is Exile, 18 grand. And then Pepsi, and then Southern, and then Dawn, which is a small cap ETF. McDonald's, Uber. I'm underwater in Uber. Now, I'm underwater in Uber in this account. I'm up about 50% in Uber in another account. So I run 5 accounts. 3 of them are buy and hold accounts. An IRA in my wife's name, an IRA in my name, a SEP IRA in my name, and then I have 2 trading accounts. One has the right to buy options and a little bit of margin on it. And then one is just my large trading account where there is no options, there is no margin, it's just a cash account. So by sorting and selecting them like that, I don't get this a lot. So as you go through here, you're going to see, look, where's it at? Yeah, like ARK down 30%, GBTC down 27%. Good. That's how we build them up. I was down 40-something% in MPLX. Now I'm up 34%. So shit changes over time. So every day as I make money, I'm looking to allocate money. So as you go down here, it's like, and remember when let's go to the very bottom. Look at some of these positions are tiny, right? Like $500. Well, I'm looking to grow those, but I just didn't have much. I had $500. Put it on. We'll see what happens. It may take a while to grow it, but if you look at the ones that are 35,000, it's because I've been in them 10, 12 years. I've been doing this buy stage ones for 10 or 12 years. Here, I'll show you another one. Hold on. Let me move this over here. Now, this one, though, and it was more, and I took profits probably more than I should have. Hold on. Ooh, down today. All right. So this is an IRA. Now, so in this, I'm not trying to have each account diversified, spread out. I'm looking at the totality of everything, right? So what I do every at least once a month. Early, I used to do it more often. I would go to here and I go print. And I would print all of these off. So I'd print this and it'll be like 2 pages, right? And then I would go and look at the stocks and I would look and see how much does the dividend, how much does it pay? And then I would hand multiply it times how many shares I have. And off to the right over here, I would write $92. And then I'd write $42. And then I'd write $93. And I'd write $12. And I'd go down the list for each one of these manually by hand. Not that big a deal while I'm watching TV. And then I'd get a total and I'd go, oh, this account makes $4,500 a year. E-Trade, you can just hit, you can just hit a button. It'll tell you how much your dividends are for the year. But I like to manually go through and do it. And what that does is then I get to the end and their total, like in this account's 119 grand, right? Well, that other one was 500 and something, right? So I totaled these up and they're printed out. I can see each stock. I can then look at them and I go, okay, I got a lot of this, a lot of that. I really like to get some more of this. Where's it at on the chart? And I go look and say, well, shit, it's not in a good buy zone. So I'm not buying any of that. Now, Ford, what do I want to do with this? Now, I was underwater by 50%. I was underwater by 50%, but it's in buy and hold. I don't know if you know what that means. That means you keep it, okay? Now, most people quit, though. The reason they don't make money in stocks is they quit on their stocks and they quit on their strategy. They quit because the time changes. It doesn't look fucking green when they log in. They read an article. They see something. They go down a rabbit hole. They get off track. Well, I'm going to replace this stock with that stock and this stock with that stock. So instead of being they're not up 159% on it because they got out of it. And that, I don't know any other way to be up. You're not going to rotate from good stock to good stock. It's just not going to happen, man. At one time, this CSX trains, they've done a 3-for-1 split. I started buying it in 2012. How much was it? Now, those 30 shares that I bought in 2012, I'm up 408%. Look at the price paid, $6. Now, they've adjusted this. It was like $12, and the stock went from 12 to 20, back to 12, back to 20, and it languished for multiple years before finally they got their shit together and took off. Well, all of that languishing allowed me for years to accumulate shares, and now I'm up like $8,000, 311%. I don't want to sell it. I have no intention of selling it. I'm trying to, I like the size. I have a $10,000 position in trains. You get what I'm saying? So as I go down this list, these are newer. If you go look, this is a new stock. It was purchased at the end of 2021. So that's a new stock. Uber, 52 shares, right? Up 26%. So obviously I purchased that a long time ago. And so the lower the price, the newer they are. And as you get higher up, I've owned them for a lot longer. And they just grow and expand. I'm not trying to balance all of this. You could, I guess. But I don't want to slow down for it. It's going. Let it go, At some point, you got to balance. I try to have the top 7 or 8 stocks, top 10 stocks, somewhat balanced. But most of my money, I'm focusing on the ones that are lower. Uber, this was a new purchase here. We added this to our buy and hold in the money flow gang. When did we do this? In November. And why would we bought, November 23rd? So let's look at it. Yeah. So where was it November 23rd? Right there. So I made my first buy right there. Hold on. Right. Now, if a guy bought it over here, he's probably not feeling that good about that stock. Now, why does he not like it, but I love it? He's basing it on the price of the stock. That doesn't fucking matter, man. It's going to go up, down, up, down, up, down, up, down, up, down for the rest of your life. So, but I'm just trying to take advantage of the volatility. So I want to own some here, and it went down a little lower, and I'm like, all right, well, we'll wait for the next stage 1. Doesn't matter. Well, it came right back up. We know that's bullish, right? So we had to start buying. And then once it breaks, I'm done. I can't buy this stock. It could be another 6 months before I get a chance at this stock. There's the stage 3. It's going to come back down. Until it does this again, I won't buy any. So as I get money into my account, I got to scan through all of these positions. Okay, which one is set up on a stage 1 right now? It don't matter if I'm down in it. That's not the game I'm playing, man. So if you come over here to tree and you're like, well, I'm down in that one. And it may not be right now it's not a time to buy it. It's not a buy. This was a buy down here. Now it's moved up. So the price I paid doesn't matter. That only matters to you. That has nothing to do with the money flow. So when you see this, it doesn't ask you what price did you pay. That's not on there. These are buys, stage 1 and 2. That's it. So what's more important to take into consideration is your position size. So do I want to buy any more forward? Probably not. It's 17,000. My next highest is 12. If anything, I probably should have took profits in it. And you say, well, why didn't you? Well, the dividend is back. Look, it's paying a nice little dividend. So I don't want to do that, But the next time it pulls back, I'm going to be looking, I don't know, probably not. Probably not. It's probably too high for me right now. But for you, it might be okay. That's the only time I consider what, and it's not even what I paid for it. It's like, what is it valued at right now inside of my portfolio? And I don't know, you could make an argument that that's not a good way of looking at it. And you might be right. I just don't like to have too much concentrated in one stock in case there's a catastrophic problem. But if all of that money had been in Facebook or Tesla or, Roku, you might have made a fortune. So, what else? DLR. When did we add that to the buy and hold? So if you're in the money flow gang and I don't do a lot of moves in the buy and hold, but if you look when I do them, you should do them. I'm not doing it half-ass, like it's thought out, researched, and looked at. So on 12/18 in the year 2020, I bought 23 shares of, what is this, DLR. And if we back this up, yeah, it was way back here. Now, this is a weekly chart, so we're not going to see it like we would on the daily. But remember what happened? It fell. It had ran up, and it went to 125, and it fell from 125 to 105. And at that point, it was undervalued by like 40%. So I start buying. And then what happens? It breaks out, runs up, man. So, what do we do then? We're just waiting, man, until it comes back down and goes on sale again and goes into a new stage one. It's not much for me to do. Now, you could have bought some over here and over here. I didn't. Let me see. I don't know why I didn't. Like over here, right there, would have been a good time. Why didn't I buy? What was that, October? So you guys should have bought, even if I didn't buy. Let's see. Wonder why I didn't buy. That was dumb. So you see how my position would be better, right? So that sell-off, I don't need to avoid that. I need to pick up that stage one right there. And if you just keep playing that game moving forward, as long as the stocks are quality, and you just keep playing this game, this is close now. Look, this is close. The middle block you're going to have with this is you're going to be like, fuck, that's a lot higher than I paid for it originally. Yeah. Guess what? The last rental property I bought was $315,000. You know what the first one was? $24,000. Shit goes up. Think of Pepsi. I first bought it for $52. It's $170. If I would have paid $100, it was still I'd still be up $75 from the $100 purchase, right? So be careful allowing what you paid for something to affect how you think about a stock. It's what stage is it in, right? So even if this price is 2 times higher than you originally purchased, that is a stage one, and that is a breakout, and that's a breakout. It doesn't matter what you paid for it, and that breakout moved higher, and that breakout moved higher. Now, again, based on my size, how much money I have committed to that one stock, I may, in lieu of that, go, hey, I'm not adding. It's already too big in my portfolio, and I let it pass. But that's not me saying the money flow, it's not a. So I hope you can get that distinction. It's probably a fine hair there. What does it say? As Fat Joe says, yesterday's price is not today's price. That is true. That is very true. Anyway, I probably should wrap up on that. Appreciate you guys listening. The market's going to close. Man, I was sure thinking ARK had turned. Dirty, dirty dog. And nope, down it goes. Spoke too soon. Spoke too soon. I better delete that tweet. That's the thing. Nobody knows, man. Where's Uber? Uber's trying to hold on. The selling pressure's on, though. I don't know, man. We'll wait and see. I'm not looking to buy any Uber. If it gets down to 36, starts going sideways, I'm back on the Uber. We'll just let it see what it does here. I don't know who Fat Joe is, but he sounds fun. I got a couple tickets left for my event yet. I was going to make a video today, but I was kind of being lazy to see if I even needed to. If I sold all 8, I wasn't going to do it, but I might need to yet. So we're doing it in New Orleans on February 11th. Mostly whiteboarding and talking, but if you bring your computer, and if you like that short-term stuff, Day Trade Professor will be there. And then if you want to get into some real estate on Saturday, that's what I'm hoping to do. I got an influencer coming. He's got, I think every time I talk to him, he's bought a property, but he's in the 20s anyway. Between the two of us, we got 40 single-family houses. So hopefully we could teach you a little something about that too. We could dig into that game we were just looking at, all this long-term stuff, So we'll do some short-term with the professor. We'll do some position trading with me and buy and hold, and then we'll get into some real estate the next day. We'll have some drinks at my house there. We're going to do it at my house, so I'll show you a 200-year-old house. But don't fuck with anything because it'll break real easy. That's the only problem with a 200-year-old house. It breaks real easy. If they don't sell soon, I'm going to get greedy. You're talking about on that. Yeah. I'm so convicted on Uber, it could damage me, Sometimes you're, and that's all right, man. Sometimes you take a punch. Shit, boxers get knocked out. That's the price you pay. Sometimes you just got to take it. Don't get down on yourself. I mean, the way we protect ourselves from our conviction is by spreading out our money, and knowing that we can be wrong. And the way you do that is spread your bets. The fact that Lyft's going down, Roku's going down, you know what, that makes me feel better about it because I know. Look at Roku. Roku is standing strong, dude. That is very positive. I would probably, if Roku's not down, I'd probably add to that. All right, man, you guys be good.